In this video, we're going to take a look at one of the most trendy high-yielding dividend ETFs right now, which is ticker WPAY, the Roundhill WeeklyPay Universe ETF. I've seen a number of people leave comments on my videos about this holding, as well as people talking about it on Reddit pretty frequently. In a really short amount of time, it's won over a lot of high-income investors, and when we look at WPAY's fund page, it's going to be clear why that is. According to Roundhill's website, this ETF currently offers a dividend yield of over 72%. And as you can probably tell by the name of this fund, WPAY issues distributions on a weekly basis. On top of that, its share price performance has actually been pretty steady since its IPO, which is another reason why it's likely been so popular. Now, when a lot of people come across a fund like this, they'll usually do some quick math in their head on what kind of income they can expect. A $10,000 investment in a 72% yielding ETF would obviously pay you $7,200 per year. A six-figure investment in this ETF would pay $72,000 per year, which is an even more enticing thought. So let's go ahead and take a closer look at this ETF and see if it's worth all this hype. According to its description, it says, the Roundhill WeeklyPay Universe ETF seeks to track the performance of something called the Sole Active Roundhill WeeklyPay Universe Index. WPAY is designed to invest in the eligible universe of single-stock WeeklyPay ETFs. And then after that, they list 3 reasons why income investors should consider investing in this fund. The first is weekly distributions. WPAY pays distributions every week, offering a recurring income stream for shareholders. The second reason is diversification. WPAY offers diversified exposure to the entire suite of the Roundhill WeeklyPay ETFs, which we'll touch more on later. Then finally, it's seamless. It's rebalanced monthly to equal weight, ensuring consistent exposure to all single-stock WeeklyPay ETFs in a single ticker. Looking at this fund from 10,000 feet, its share price has been mostly flat since being launched, but still positive. According to Google, it's up about 4% since its IPO. What's even more appealing is how much the dividends have grown since being launched. Seeking Alpha is showing that WPAY's weekly dividends have grown from 54 cents in its first week to 73 cents as of their last distribution. As you'll notice though, there's only 6 payments showing on this chart. That's because WPAY is less than 2 months old, which means it doesn't yet have an established track record. So the performance up to this point has been excellent, but there are 2 really important things that we need to investigate. First, we need to know what the Sole Active Roundhill WeeklyPay Universe Index is, and also what option strategy it uses to provide this income. Sole Active is simply just a company that provides indexing services to businesses. So just like the S&P 500, if you have enough money and want to start your own investment fund, then you can pay this company to create your own stock index. The Roundhill WeeklyPay Universe Index is simply all of the weekly paying ETFs that are currently available. So WPAY holds every weekly dividend fund currently trading in the market by Roundhill. In its prospectus, it says, under normal market conditions, the fund invests at least 80% of its total assets in the shares of exchange-traded funds comprising the index. This means that WPAY is a fund of funds, which basically means it's an ETF that only holds other ETFs. A major downside to these fund of funds is that they're usually pretty expensive. That's because they include the costs of managing both the FOF and the underlying funds it holds. I've seen fund managers like Tidal do this sort of thing, where they'll advertise some amazing new ETF and it's all comprised of other Tidal ETFs, so they can make a killing off of these kinds of investments. But as of the making of this video, there's currently only 15 ETFs in this fund. Roundhill just launched 4 additional weekly funds this last week, so when this index updates at the end of the month, then WPAY will have 19 funds instead of 15. And all of the 15 funds in WPAY are exposed to just one company. That currently includes Apple, Amazon, Robinhood, Meta, Microsoft, Tesla, Palantir, AMD, Berkshire Hathaway, Google, Nvidia, Broadcom, MicroStrategy, Coinbase, and Netflix. You may have noticed like I did that they definitely aren't diversified when it comes to sectors. All but one of these companies are tech companies. So this claim that WPAY is diversified is technically true, but it's definitely not great with the diversification. Its 15 holdings are 93% tech. Needless to say, because it's so concentrated in just one sector, I don't believe WPAY should be your only holding. If we ever do see this big AI bubble burst like everyone seems to be predicting, then that's going to be a major problem for nearly every holding in this ETF. Now, when looking at this fund strategy, you might be surprised that WPAY, and therefore all the funds in this ETF, are not covered call funds. Instead of using covered calls, they use swaps, which makes them different than other funds I normally talk about. And what's interesting is because they don't use covered calls, there's uncapped levered upside, which their website proudly touts. So let's go ahead and look at ticker AAPW, which is their Apple WeeklyPay ETF, and see just how good this uncapped upside has been for them. Comparing the Roundhill fund with actual Apple stock, you'll see it trails behind Apple pretty significantly. On the plus side, comparing it to YieldMax's Apple fund, which uses synthetic covered calls, the Roundhill ETF is better, but this uncapped upside hasn't been playing out as great as it sounds. In its prospectus, it says the following about their swap strategy. It says it seeks to achieve its investment objectives by investing in total return swap agreements and common stock that in aggregate return approximately 1.2 times, or 120%, the calendar week total return of common shares of its applicable underlying security, each an applicable security, while making weekly distribution payments to shareholders. Each WeeklyPay fund will invest at least 80% of its net assets, plus any borrowings for investment purposes, in swaps that utilize its applicable security as the reference asset and in shares of the referenced security. For purposes of compliance with this investment policy, derivative contracts will be valued at their notional value. I think it's great that Roundhill took a new approach with their WeeklyPay ETFs, but again, that so-called uncapped upside hasn't worked for them. Out of curiosity, just in case the Apple fund was a one-off, I decided to compare several other WeeklyPay ETFs to their respective stocks, like Berkshire to BRKW and Tesla to TSLW. And Roundhill's funds always significantly underperform. Look at how poorly their Tesla ETF has been at capturing Tesla's upside. So again, this uncapped upside really isn't there for this ETF and really any of their WeeklyPay funds. So what do I ultimately think about this ETF? It is a better option to go with than holding any of the individual funds like TSLW or AAPW, unless you're interested in trying to short-term trade, which I never am. This diversification it touts really isn't great since it's so concentrated in just one sector. I would describe WPAY as a good investment until the tech party is over. It's great that they're adding even more holdings to it, but I wouldn't feel comfortable trusting my retirement to this ETF. As long as you know what you're getting into, if you wanted to allocate a small percentage into it, then I think that's fine. But definitely not 30 or 50% of your portfolio, in my opinion. I'm sure a lot of people are holding this ETF with the intention of selling it if the tech sector starts turning sour. But that's really not something that I have an interest in. It's rare for me to buy a holding with the intention of selling it at a specific time or if a specific event takes place. But feel free to let me know what you think of WPAY. Do you think this fund will stand the test of time, or do you think it's too risky? Let me know in the comments, but that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades, and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.